Hey, Jeff Cohn here with the Team Building Podcast. Super jacked today to have an amazing guest, Chris Naugle, with us. I'm going to read his official bio. Chris is nationally recognized. He's an entrepreneur, speaker, trainer, real estate investor. He was recently starred on the HGTV show called Risky Builders. And with over 12 years of experience, Chris has successfully completed over 200 deals and managed over $30 million in investor money. As co-founder of Flipout Academy and Money School, Chris mentors and guides up and coming investors on how to get results and create passive income through real estate. Chris, how are you doing today, man?
I'm doing awesome, man. Thanks for having me on the show. I'm pumped.
Hey, I'm glad to have you. And I know we were talking off air a little bit about some of our successes and how raising capital sometimes becomes someone's greatest hurdle because they just simply don't know a lot about it. And of course, I shared with you, I have my own investment company. We buy and sell about 100 houses a year. You've obviously done over 200 deals. So explain to our audience members, I guess, what your role is today, and then we can start to kind of piece together how you got there.
Sure. So we have 7 different companies, everything from a wholesale company to a big flip operation, and then we own a lot of rentals. What I really specialize in is our company called Money School, where we teach people how money really works in real estate. So, the biggest thing that I've always found, given my humble beginnings, is money was always my barrier to success. It was always that mindset thing that played games with me that I never wanted to chase my dreams because I was like, well, I got to have the money. I got to have this. So today what I do is I teach entrepreneurs and mostly real estate investors exactly where that money is and how to get it. And it's not what most people think. They all think the traditional ways, and that's not where money is for your deals. And I'm very passionate about changing the way people think about exactly where that money is and how to
Awesome. Well, I know we have a lot of people that listen to us that make a lot of money, and I agree with you that a lot of times, independent of how much we make, we always think we don't have enough. And the truth is, I don't think that people are willing to take the time to learn how to invest, and we invest a lot without money. So people are like, what, invest without money? You can use other people's money, which is the best way, I think.
That's all we do.
There you go. So we'll get into that a little bit. Before doing that, what type of deals are you funding? What type of deals are you finding? You had mentioned you had done about 200 sites. Are these single family, multifamily, commercial, or all of the above?
Yeah, that's a great question. So most of our business is 1 to 4 units. We truly believe in the 1 to 4 unit model. That's what we focus on, whether it be flips, which we're not doing as many flips as we used to. We mostly do the BRRRR strategy, buy, rehab, rent, and refinance, and just building a massive portfolio doing it that way. We used to have multifamilies and large multifamilies, and I don't see the value prop right now, given that the market's so high in buying those. It's too speculative.
Yeah, we're in the exact same boat as you. I agree with that. You can buy single family or these 1 to 4 units like he's talking about. Typically right now, we're finding them with a very strong and aggressive marketing approach. We're getting them about 30% below market value, and that's after repair value. So if you go and buy big multifamily complexes, you're probably looking at buying them at market value.
Yeah, at best. Most of them are going over ask. Yes, our model is exactly the same as yours, Jeff.
Okay. Yep. And that's what I see across the board when we mastermind with top residential real estate investors across the country. Let me speak first to, because this is kind of interesting, these 1 to 4 units. Teach me, because I'm not super experienced when it comes to multi. Are those considered multi? Isn't it over 4 that it's considered multi? Under 4, under 5 is
5
family?
Yeah, so 5 and up would be considered multi-commercials. But we just focus on the 1 to 4 units. And to be honest with you, a lot of what we do today is single family houses. I love the single family house rental model. I love it.
If you could buy them fast enough. And that's the challenge. Someone might have a 1031 and have $2 million. Well, how do you go deploy that in 90 days? Like, how much time usually do they give you to deploy your 1031 capital? There's usually
not enough.
Short window. Right, exactly. So something that I've heard just from a strategy standpoint, and it all is in line with what you guys are doing, is that there's a lot of institutional money out there. So huge hedge funds that have $100 million, and that needs to be deployed by the end of 2019. And so they look at 200, 300, 1,000 unit complexes. So you're competing against all this institutional money that has investors that are okay making 6, 7, 8%. So if you're looking to have big wins, our white unicorn's a 20% return, which is what we're typically getting, cash in, cash out. We find that we're competing against way less people if we look at properties that are under even 100 units, because a lot of institutional money wants to buy properties that are typically 100 units or more. And so I think that there's this special area between 2 units to 100 units What would be your thought on that for people that are listening?
Yeah, I mean, that's the thing. So a lot of times people do have 1031s. They need to deploy that capital, and these hedge funds, you can't compete with a hedge fund. It doesn't matter what they pay. They just need that money on the street. Same thing with private funds. They need to buy, and they need to buy before the end of the year. So you don't want to be caught buying into that speculation, where if you just stick to that model we were talking about, the 1 to 4 units, you're buying just like you would have flipped. You do heavy marketing, you bring the deals in, and then you get them. But the other thing I love about our model and, doing it the way we do it is, number one, your quality of tenants better. We don't even call them tenants. We call them residents. But the other thing that you get with that is you get the ultimate exit strategy. So I love it because I can build a portfolio of 100 single family houses. And then if I get in trouble, if the market shifts and I need liquidity for something or the other, I sell off 1, 2, I sell a couple of them off. If you own big multifamilies, what are you going to do? You're going to sell your whole multifamily portfolio. And I speak from experience because back in 2009 to 14, that's what I did. I bought big multifamilies and I got myself pretty deep, highly leveraged. I got really deep in it and I just couldn't make it happen. So I had to sell things off, and it was difficult because I had to sell large portfolio or large properties off that I should have kept, but I needed liquidity.
To make it sound as simple as possible, in Monopoly, when you run out of money and you're landing on people's spaces and you have to start mortgaging your properties, that's what happens when you can't cover your debt obligation. And to Chris's point, it's much easier when you have a big single family portfolio and you're 200,000 upside down and all you need to do is sell 2 of your rentals and now you're golden. But if you have this all in a multifamily, all your eggs in one basket and you're upside down, you need money from something else, so you can really get yourself into a pickle.
It's just always nice to be in that position where if you need liquidity, you just say, well, I'm going to sell that one. I'm going to sell that one. I don't really like that person that I rent to, so I'm going to sell that one off, instead of saying, well, I got to sell my whole 20-unit portfolio because it's either that or I lose something. I lose my house. Those decisions aren't fun ones. And the other thing, too, that's very important, and this is something I talk about a lot to all the people that we work with, is the markets work in cyclical cycles, very predictable patterns, kind of like the weather. We're in Buffalo. We get weather patterns here, and the news comes on, big storm, stay inside, don't go out. Well, the stock market works the same way. And if you think that real estate is completely, protected against the stock market, not. So the best opportunity I see right now is we are at the top of a cycle. The next step is it's going to go down. And if you were positioned properly, if you knew where all the money was to buy all the deals you could ever buy, and you were ready in a downward cycle like 2008, 9, 10, 11, where would you be today? Seriously, like what would your life look like if you had started buying real estate in 2009 to 2012 and you had all the money in the world to buy? Like,
you'd be 3 times richer.
You know the answer. Maybe 10 times, maybe 10x. And that's what's going to happen. And if you don't believe me, just wait. I'm dead on right now.
So a lot of people now will hear you say that, and I see the biggest challenge for people wanting to get into it is they're in a cash position. Maybe it's a 1031, and they're saying to themselves, I don't want to buy yet because I know it's dropping. So I'll speak to that first, and then I'd love to hear your opinion on that as well. The best time to do anything is now, as long as it's the right deal, and you can control the buy price. You can't control the sell price. So what I would suggest to anyone is look at your own market and ask an agent to go do an analysis of what the greatest appreciation was in your marketplace when it dropped. The greatest drop of all time in the United States was back in 2008 to 2010. In Omaha, Nebraska, we saw a 7% decline in the greatest drop of all time. Same as Buffalo. So in my opinion, as long as I'm buying them at least 7% below market, I'm covering my debt obligation even in a declining market. So if we can buy them more than 7 in your market, someone listening, it might be you got to buy it at least 20%, but you can essentially protect against those times. Assume it's going to happen because it is. Gary Keller wrote the book Shift. The market goes up and down. It's cyclical, but that doesn't mean you can't get in. Just make sure you get in at the right dollar amount. What's your thought on that?
So, it's a lot of the same things, and it just comes down to the buy. So a lot of people will put the brakes on and say, oh, I'm not going to buy right now because it's too high. But that doesn't mean there's not deals. People are dying. People are losing their houses. People are going through divorces. I don't mean to point out the bad things, but come on, that's the business. We are in the business of helping people that are in distress. We find distressed properties and we find it through marketing. So if you know how to buy lucrative off-market deals and you know how to find those deals where you can help somebody, it doesn't matter what market cycle you're in. You just have to be very refined with your numbers and your formula. And your formula is ours. 70% of ARV minus rehab, that's our buy. If it's any more than that, I walk away.
Yep.
You know what happens, Jeff? When we make offers, a lot of times it's always the same thing. No, we're going to list it on the market, or we're going to look at other options. Guess who calls back in 2 weeks? Because we hold the cash. We got the cash machine that will pay you right now, and I know you need the money now. You just need to through. So that's how we do it. We basically just follow a system. We market very heavily, and we use realtors. We use realtors a lot. And we tell realtors, this is what we're looking for. Find them. And they go out and they find them. We make a lot of offers, and it's a lot of work for the realtors that we work for, but it's extremely lucrative for them because we're buying such volumes. And that's how we do it. I mean, there's really not like a crazy secret. It's just be consistent and be persistent in everything you do. And every single no you get is just one step closer to a yes. So don't ever say, oh, they said no, that's it. No, a no will be a yes. Just keep doing what you do.
Yep. Every house you walk through as well gets an offer. I mean, unless you see some like legal issue with acquiring it or some crazy problematic defect, typically we're going to write an offer on every deal. We're just going to figure out where do we need to be at that 70-30 rule. For the audience listening, and I think about, I always think like putting myself in everyone's shoes. And obviously I've gone down this road. You've been down this road. What's the greatest hurdle, do you think? And I know we talked about money before. I feel, you know, in my opinion, it's the money and it's the finding the right deal. And you had said off-market deals. Mm-hmm. So just to share with the audience members, what do you think are like the top 2 or 3 strategies in finding a deal that's not on the MLS? It's not on Craigslist. It's not posted anywhere. You have to actually go find it.
Well, there's no magic answer. You know, there's no button you hit and all of a sudden lucrative off-market deals pop up on your radar screen. But you know what it is it's a relationship business. We all know that. So we built relationships with estate attorneys, divorce attorneys, with estate brokers. So the people that go in first, if someone passes away or they're getting moved to a nursing home, we know the people that are first through that door, and they basically position us as, hey, you know, if you need to get rid of this house, I know somebody that buys them for cash. They can close as fast as you want to close, and they'll make this really easy for you. We get leads almost every single day from estate brokers, and that's just one source. So the relationship's massive, but what we also do is direct mail. And I know a lot of people say snail mail is dead. It is not.
No, we do too.
It is like our most effective thing. We spend a lot of money, about $6,000 to $10,000 every month we're spending on direct marketing. And I know that seems like a big number. And if it's not your number, start wherever you can be. Start $500 a month, but do it consistently and persistently. I can't tell you how many people I meet that get into the direct mail. They do a couple campaigns. Either they don't get results or they get their deal and they just stop. That's not how you build a successful business. You got to keep doing it. Keep doing it to the point where literally you have so many calls coming in. You are so stressed out, you don't know what to do. Hire a VA to take the calls. Get some type of a software to take those calls and you know, rail those over to who they need to go to. CallRail is the one that we use. But that's how we do it. Direct mail's huge. Bandit signs. And here's the thing. So this is an awesome marketing strategy we've been doing. Most people will have a cat or dog, right? Do you have a cat or dog?
We have a dog.
Okay, so we're big cat people. And I know that just about no matter who you target and whoever you talk to, they're going to be on one side of the fence or the other. They love dogs or they love cats. So we do marketing campaigns with little kittens and little puppies. And I swear to you, and our kitten's name is Scouty. Okay, he's not a kitten anymore, but we found him when he was a kitten. And we say, Scouty wants to buy your house. So we'll do a campaign with Scouty, and literally it will be direct mail. Scouty will be at the top. Scouty wants to buy your house. Call us for a free. Scouty will make an all cash offer on your house. We do direct mail that way. We do ringless voicemails, and it's all targeted around this cute little furry red cat.
That's awesome.
If it's a dog, use a dog. I wish I could even make this up, but more people call us because they love the cat. They don't care about the house, but they call us because they want an offer from the damn
There's
cat.
Power behind these animals. I heard someone recently was telling me about, like, they've been doing studies on like Tinder accounts and which pictures get swiped up more or left, right. I don't know. I've never been on this. I got married 15 years ago, but essentially which pictures get more dates than other pictures, and pictures with pets is the #1 thing for men. So women want to see men with pets. Dude, pets will win.
I'm telling you,
houses, they'll get you a wife.
I have gotten, we did this, and it all started with a Facebook ad. Literally, like, I posted a Facebook ad of the cat on the dash when we first got him at a flip that we bought. And it just said, Scouty wants to buy your house. Then we did another one with him on a computer yawning. We said, Scouty's getting sick of waiting for you to call. He wants to buy your house. It's so stupid. We spent maybe $50 on boosting that ad, and the phones lit up to the point where we're like, something's wrong. And you know, you get a couple deals out of that, but that's just deal flow. And if you just consistently do that, but don't think out of the box.
Sure. One of the things that I know our audience members understand is building systems. And a lot of the agents listening either have a team where all the agents are already doing this, or they themselves are doing this, or it's a little bit of a hybrid of both. We know about paying for leads and paying for referral fees. We know about servicing leads. I would say that the investment wheel you create is the same exact thing, but it has to have a system, and you have to know your return on investment. So I'm sure Chris knows how much it costs to acquire a closed deal in Buffalo. For Omaha, it's about $2,000. And then our average net on a retail, a wholesale or a wholesale is about 20,000. So the ROI is 10x ROI on our flipping wheel. Are you guys close to that? Are your numbers?
We're a little bit under where your numbers are actually.
Okay. But you're probably doing a lot more
Pretty
volume
close.
than we are. So that's usually the number we see across the board. But if you can build a wheel that does a 2x return, you're winning.
Yeah,
so it's just a matter of tracking it. And, and if you already have a real estate team, have an agent on the team that you designate as your acquisition manager, who's the one that goes out and follows up with all these lead opportunities. A lot of people listening have all of the right tools to be able to do this and just simply haven't chosen to take the time to make it intentional. So the last piece that I'd want to speak to is the money. I think agents have an idea of where they can go about finding the deals. A lot of the agents listening make a lot of money, but of course are using it to cover the cost of their car and their house and put money away for savings. So let's say that someone's ready to do their first deal. They've never bought an investment property before. You had talked about this BRRRR strategy, which I'm a big believer in as well. So instead of flipping and just getting 20 grand that Uncle Sam takes 40% of, you can buy something and hold it and get your money out of that deal sooner than most people think. Some of them that we refinance, we can refinance in 90 days. So explain to everyone a little bit, maybe take us through BRRRR one more time and take us through an example transaction that you might acquire, like buy the house over 150, fix it up, now it's worth 200.
I'll just give you a recent one we just did. So it's a duplex up in Buffalo in a decent area, but still a scary area. We bought the house for 90 grand, and which was a good price. It's worth about 180. And we found that through marketing, same thing as but we got the deal. And the biggest thing about money, and whether you have money or you don't have money, where most people think they need to go for money is the bank. Most banks, number one, are going to loan 80% of purchase price. That means you're out of pocket 20% plus closing costs plus rehab. So this duplex, we had about 30,000 in rehab. So we painted windows, upper unit rental, and we got it all finished up. So we're now making 900 on the upper, 750 on the lower. We're into it about 120. The very next, and I used private money. Where did the private money come from? Self-directed IRAs. So how many people do you know that have IRAs out there? But what people don't know is that in their IRA, they can move it to a custodian that does self-directed IRAs, and they can use that money to buy real estate. Well, or more importantly, not buy real estate, loan money to people for them to buy real estate, being the bank's the ultimate. So that's how we got the money. We used somebody's self-directed IRA. They loaned us the money.
I love, Chris, I love how much you just said in 10 seconds. Like what you just said can make people that are listening multimillionaires.
Because there's trillions of dollars.
It's infinite.
Trillions of dollars. It is. And
the beauty is you can give them better returns on your self-directed investment through your investment company than they're ever going to dream of getting in the stuff that they're in right now. And that's why they choose to do it.
Yeah, we don't use banks for acquisitions, period, ever. We never use a bank. We use private money from people that you would think, oh, you must have a bunch of rich people. Absolutely not. We are in Buffalo, blue-collar America, Rust Belt. I find people that need a change in their life. I find people that need more money for retirement, and I offer them 10% fixed on their money. Then I give them a first position lien on the property, meaning you are the bank. You made them the bank. If you don't pay them, they now own your house. They foreclose.
Real quick, you guys can do promissory notes and do the exact same thing outside of an IRA. It doesn't have to be self-directed.
Correct.
If you have someone that does have 100,000 and wants to fund your first project, you pay them a 10% return, have them guarantee it, take first position. You can do that as well.
Right. So that's self-directed IRAs. I wish I had an hour to talk. I'd get into 401ks, hidden equity, but there's so many things that every single person you know has that they don't even know how to use. You can teach people how to be the bank, and there's trillions and trillions. Anyway,
so self-directed IRA money gets us into the deal. We had a $30,000 rent. We're 120 grand in. Cash flowing. You talked about the rent you're getting on both sides. What's the next step?
So the next step, I wasn't even done with the deal. I took the deal to our local community bank, and a community bank is the only type of bank we use. We refinanced it. They'll give you 80% of the appraised value. So when we got it all done, the house appraised, we ended up pulling out $18,000 more than what we had in the deal. So we paid our investor back. We pulled out $18,000, so basically flipped it to ourselves.
So real quick, if it appraises at $180,000, you guys, if you're tracking.
Correct.
The bank is giving them 80% of $180,000. So they end up making 20 grand when you get everyone paid back and get them their 10%, you're still making a profit and keeping the investment.
That's the biggest thing. We keep the asset. And now we have an asset that we have zero money in, zero, not one penny of our money is in that deal. And we make money while we sleep. And we just turn that thing and we just cash flow it and cash flow it and cash flow it. And that's the perfect BRRRR. But let's just say you get a bad BRRRR and where you got to put 10 grand in because maybe it doesn't appraise as high. Do the math. I got a single family house that we make 62% on our 10 grand. And that's exactly how much we have in 10 grand. We make 62% return. And that's one I screwed up on. So if you could screw up and make 62% on your money, would you? That's a BRRRR. That's exactly what it is.
Yeah, it's awesome. Chris, how does someone get in touch with you? I know we could go on for 5 hours. This has been amazing.
Big topic.
Thank you so much for walking people through this. And this is exactly what my investment company does. We acquired 50 doors just last year, and we've applied this BRRRR strategy. We were flipping and making 20 grand a flip, and I'm like, why are we losing out on all these houses that we could have kept? And honestly, on most of them, we got the same amount of money just in the refi. Like, it's a no-brainer. You have to find the right banks, to interview enough people, and you guys can piece all this together.
It's just so funny, Jeff. The more people that I meet that, understand this stuff, we all share the exact same ideas. Like what you just said, why would I give it up for 20 when I can keep it and make 20 and never give it up? So if people want to get a hold of me, easiest way is Facebook, Chris Naugle, or Flipout Academy. You can find me either one, or my website, chrisnaugle.com. Now it's Naugle. And one of the biggest things, if anyone ever had any questions about how money really works, all these strategies brought down to a 5th grade level. We teach this at a thing called Inner Circle. It's our mastermind. We bring in 10 people at a time. We go deep into it for one day. It's very affordable. And literally, I would change people's lives. The testimonials, and people love it. They learn more than they've ever learned about money in one day. And then they realize that they've been being lied to their entire life about how money really works.
Awesome. Thank you again, Chris. We'll have all of those links here in the body. If you're here on iTunes or YouTube, you'll be able to find cross links there. We also would request that anyone that got value out of this, which I'm sure it's anyone that listened, would you please go out to iTunes, give Chris's episode a 5-star ranking, and give him a shout out in your message that you post on there. Last thing, I want to continue to stress the importance of all of our audience members attending our team building summit this summer. It's going to be June 24th through June 26th in conjunction with the College World Series championship baseball game. So any of those baseball lovers out there, come check it out. Great time to visit Omaha. The weather's beautiful. It's in downtown Omaha, which is what we call our old market district. It was all these like cobblestone roads that were put in the late 1800s. They're still intact. So it's going to be a great time. It's a 2 full-day event, teaching agents how to leverage their business and get out of the day-to-day grind. We will have people that are going to come and speak on real estate investing and a lot of other topics that are applicable to anyone and everyone that listens to this podcast. So to find out more information about that upcoming event, just go out to eliterealestatesystems.com, click on events. I think we're selling tickets for like $297. It's super inexpensive for 2 full days of content. Chris, it was a pleasure. Thank you again for coming on our show today.
Thank you so very much. I appreciate it. Thanks, everybody.
All right. See you later.
All right. Bye.
All right, man.
All right. Cool. So now do we already schedule you to be on our podcast? Did we do that yet?
I don't think we have. If you drop me an email and I'll send you a link to my calendar, and then you guys can pick a day that works best for you.
And I'll have Shauna get you on that. And then, just anything I can ever do to better serve you and your students, by all means. I mean, even if you want me to come out to one of your events and speak on just money, I'd be happy to fly out on my own nickel and give some serious value.
No, I appreciate that. I'll keep you in mind for that. We're in Boardroom. I don't know if we signed up yet, but we're going to be in it. So I'm sure we'll see each other at different events. So if you see me anywhere, please come up and be like, hey, Jeff, because obviously we both meet a lot of people. So if you can connect the dots and you're like, wait, I know that dude. There's not a lot of big, bald, tan guys like me. So
you are pretty tan, man. I was going to say that, but so many.
I travel a lot.
Yeah.
I know, man. Lots to talk about. Great to talk to you, Chris. It looks like we align really well. We're doing a lot of things.
I think so. It was hilarious. Yeah. Thanks so much, Jeff. And I'll get you on our podcast, and we'll I'm sure continue to do stuff. So
let's keep rapping, dude. That'd be awesome. Have a good rest of the day.